everybody and welcome back to my channel. In the past few weeks, two major IPOs hit the market. The first one was Root Mobile and the second one was Happiest Minds. Both have performed very well on the stock market on their listing days. Another new IPO which is hitting the market this week is CAMS IPO. We all have been investing into mutual funds through CAMS in all these years. But now that CAMS is coming up with its own IPO, is it worth investing? We will check that out in today's video. But before starting that, please don't forget to hit the subscribe button and the notification button right down there. Computer Age Management System was incorporated in the year 1988 as a private limited company. However, last year in September, it was converted to a public limited company according to a special resolution passed by the shareholders at the EGM. CAMS basically provides technology-driven financial infrastructure services to mutual funds and other financial institutions. So, it is involved in mutual fund services, alternate investment services, payment services, banking and non-banking services as well. A part of the business also is into insurance services, KYC registration, account aggregator business. To put it in very simple terms, main source of CAMS income is the fees that it charges from its mutual funds clients on the basis of the investments that it makes on their behalf, which is called asset under management. So they basically charge a percentage of fees basis the asset under management for each of their clients. CAMS was a market leader and has serviced around 17.1 trillion rupees asset under management, which constitutes approximately 69% of the total mutual fund industry. CAMS also services 4 of the top 5 as well as 9 of the 15 largest mutual funds in India. It was based on an assessment done by the CRISIL and the report was released around July 2020. As per the CRISIL report given in the red heading prospectus, we see that CAMS has quite a large market share of the asset under management of all the mutual fund clients. We see that in the current year, which is ending July 20, it is around 70%, whereas the competitors like Karvy, Sundaram and Franklin are way behind with 27%, 2% and 3% respectively. We already know about the offer details of this particular IPO, which is going to open on 21st September and close on 23rd September. The price band is from Rs 1229 to 1230 rupees. In this offer, 50% is reserved for qualified institutional buyers, 15% for HNIs and only 35% is available for the retail categories. Looking at the shareholding pattern of the company, we see that the promoter of the company is Great Terrain. However, the most interesting factor to look into the shareholding pattern is that 37.48% of the total equity is held by NSE Investments. Now, NSE Investments Limited is actually the subsidiary of National Stock Exchange Limited, which bought a stake in CAMS in 2013 and 14. Recently, in February this year, that is February 2020, SEBI sent a notice to NSE saying that this acquisition did not have SEBI approval and hence it has to sell its stake in CAMS. So you see that the entire stake of around 37% held by NSE is only out for offer. That also means that none of this money is going to go to CAMS, but it is going to go entirely to the selling shareholder, which is NSE Limited. Moving on to the financials of the company, we see that the profit before tax has been quite stable in the past 3 years. In 2018, it was around 34%. In 2019, it came down a bit at 28%. And finally, in 2020, it was back at around 34%. Not a major growth here, but yes, the numbers seem to be quite stable. Now, looking at the profit, the net profit for the period, it also seems hovering around 20 to 25%. Cash flows have certainly increased year on year. We see a year on year jump right from 2018 to 2019 and even 2019 to 2020. For the 3 months ended 30th June 2019 versus 20, we again see that there is quite a considerable increase in the net cash flows. It is also interesting to see that the company has an asset light business model, and that is why it reflects in the stable and increasing EBITDA, which is the earning before interest, tax and depreciation. Also, the company has negligible debts on the book, which also works in favor of the company. As per the CRISIL report given in the red herring prospectus, we see that CAMS has quite a large market share of the asset under management of all the mutual fund clients. We see that in the current year, which is ending July 20, it is around 70%, whereas the competitors like Karvi, Sundaram and Franklin are way behind with 27%, 2% and 3% respectively. The same report also gives a comparison of CAMS and Karvi on various parameters. For example, the revenue from operations, where certainly CAMS is leading with quite a huge balance. The compounded annual growth rate of the company has also been good at around 12.8%, while for Karvi it has been around 9%. The profit after tax margins are also around 24%. We've already discussed that. Return on equity is around 34%, and looking at the monthly average asset under management, it is around 17.142 as compared to Karvi, which is just around 6,500. The branch network which CAMS has pan-India is also very strong at around 271 branches. So certainly the company is way ahead of its industry competitors. Another interesting factor to look here is that it is the first mover in its industry to come up with an IPO. We do not have any other peer in this industry which is already listed here. Doing a SWOT analysis for the company, we understand that company has quite a few strengths here. For example, the earning per share has been quite consistently increasing for the company in the past 3 years, from 29 rupees to 26 and then 35 in the last financial year. Accordingly, the PE ratio basis the current price on offer is around 35 times. Return on net worth, it is around 31%. Again, looking at the net asset value per share, it is somewhere around 108 to 110. Now, coming to the most important point which should be considered here, risk. Now, the important point to consider is that the impact of COVID-19 is now spreading worldwide and in all the industries. The thing to understand here is what is going to be the impact and the duration of COVID-19. We have seen a lot of volatility in the market. We have already seen a lot of withdrawals and redemptions in mutual funds, in systematic investment plans. How this is going to impact CAMS is something which is going to be a very big question mark now. The second point to understand is that the company is regulated by several entities like SEBI, IRDAI, RBI, MCA and among others. And it is under a constant scanner, and if there is any kind of non-compliance, it can have a very big impact on the company. This is something we have to keep in mind here. Another important point to look here is that there is a lot of competition in this industry. Of course, there are no big or large players here, but certainly a lot of smaller entities are there which pose a lot of competition to the company. For example, KFin Technologies Private Limited, which was erstwhile Karvi. Then we have BillDesk, we have NSDL Database Management Limited. The company has already highlighted all its competitors in the red herring prospectus. CAMS will have to maintain its high technology intensity if it really wants to give a tough fight to all these small competitors. Also, there is a requirement of extensive branch network. Of course, CAMS right now has the largest number of branches, but the company will have to increase the number of branches if it wants to spread its dominance across India. Talking about the opportunities, we see that CAMS has quite a strong client base, with having top clients in the form of HDFC Asset Management Company, SBI Fund Management, ICICI Prudential Asset Management, Aditya Birla, and many others. So all in all, CAMS IPO appears to be a good buy for the long term, because the company's financials are quite strong, and in the long term the company is definitely going to bring some capital appreciation. However, talking about the IPO and the listing gains, it really depends on how the market overall responds to this particular IPO. In the past few weeks, we have seen a tremendous response to Root IPO and the Happiest Minds IPO. We would also be able to judge the market sentiments based on how the subscriptions are on the first day itself. That would be a very helpful indicator of how the IPO is going to get listed. If you found this video to be helpful, don't forget to like, share and subscribe. Don't forget to share it with your friends who would like to invest in this IPO or would like to gain more knowledge about this particular IPO. Thanks for watching.